shit,
So I
really?
waited at the race for
233.
Want to
All of you.
actually
Come on in.
jump in for a little bit? Let's introduce our gold department. Come on, Tom.
Yeah.
Going live
We got
in
YouTube,
3,
we got Facebook.
2, 1, and we are on Facebook Live. So
And
this is
YouTube. Hey, YouTube.
and YouTube. Yeah, that's right, on the other camera. But so this is Brian Zaner Ag Hedge coming at you from Chicago. Before we get started,
What do futures do, Brian? Or what do they have?
they have a risk. So trading futures and options does have substantial risk and is not suited for all investors, like Dan.
But it turns out Dan's actually pretty good at his job, and today really relied on that because today we didn't have to do very much. The ags were kind of dull today. The money was all flowing elsewhere. Dan, where was it going? Let's talk metals.
It was a gold day. Gold, silver, metals across the board up.
Talk louder.
Almost a 4% move to close the day for silver, up almost 2% for gold. Yeah, making new multi-year highs, huge flows into the metals, out of the stock market perhaps because we've seen some volatility there, but stocks did close green, or I think they're looking to close green. The last I checked, or down slightly, but basically the recovery on the day is impressive enough.
400-point recovery today, practically.
Absolutely. And leaving the grains with such a slow or mediocre day was not what we were hoping for. We wanted to see pressing through the highs, and making new highs for August for like maybe the December corn contract, for example.
And there is a lot to talk about actually in grains today.
A lot of setups were developed today, just not a lot of excitement. Anyhow,
keep going. You were the one busy all day.
Right, to wrap on the metals, expect more volatility. While the 1500 on gold, we're probably going to see new highs towards the 1530 area. Silver making highs towards 1720 today, backing off into retest $17 in the afternoon. Probably a level it'll base from as well. And while we remain above 1500 in gold and $17 in silver, we'll probably see higher highs in Asia. Be forewarned though, this market has been making a habit of making a new high in the Asia session and selling off into the New York Open. Now, not to say that'll be the case, but that's been the pattern we've seen. So a warning I've made to all my clients is, hey, it's been a great day. Those long the metals, you definitely look to protect your profits. Don't get too excited on pushing the pedal to the floor here because we are towards the end of a very, very strong move that's taken us into new multi-year highs that a little bit of a pause and some volatility and a pullback would be the makings of a healthy market.
Dan, sometimes what's the quickest way to double your money?
The quickest way to double your money.
Fold it over and put it in your pocket. Sometimes
Absolutely.
that's what you got to do, especially after a day like today.
Absolutely. Go, if you had a good day, if you have a good day in trading, take a step back, count the money you made, make sure it's all there so that tomorrow you can go back at it. Because, and I say that because going back at a new trade with a new account balance hopefully is at a higher level, you look at it differently than if you were still in the trade hoping for more gains.
Right.
And that greed can kill a trader.
You
And days
subdued
like
the
today,
greed, you brought forth that kind of protectionist thinking that can keep you in the game. Longer.
Absolutely.
And I don't want to say game. We're not gambling.
no,
But
but this is
keep you
good
in.
account level risk management at the end of the day.
So, sorry, I didn't mean to cut you off. Dan, go for it.
No, so right, and that kind of wraps the metals. Obviously, strong days, very likely continuation will pull us into higher prices in the overnight. We've seen some real momentum buying here, but that has left agricultural products and other commodities at the wayside. And usually gold moving like this, people like to scream, oh, this is inflationary. Oh, this is signs of inflation. Well, we started talking about it yesterday. Grains and other markets haven't seen those effects yet, and that's a very slow tide to happen anyway.
I would argue that this was inflationary. I would say that this was a flight to something other than the stock market.
Absolutely.
The volatility we've had in the stock market the last couple of days, on days that we have seen this, we've historically seen grain get unbelievably quiet, like what we had here today.
Okay.
When money just wants to sit.
Well, yeah. So when the trade war first kicked off, immediately grains were first selling off into it. But once it actually happened, the stock market goes nuts to the upside, but the stock market still went nuts. Grains went wild. And today it's, leading into a WASD report, we have that perfect storm. We have the speculative crowd that doesn't want to deal with grains right now. They're going to see what the report says, go from there. The commercials, as I've been arguing, have been buying in front of this. If you look at the calendar spreads, today corn totally puked. But
Okay.
I think we're going to see the speculative non-commercial crowd sit on the sidelines here, and that's what we get. So we have corn that is within 2.5 cents of unchanged. We have soybeans within a penny of unchanged. It was a pointless
That
day.
was the range of the day. I mean, it wasn't, but it was
Right. Yeah. It was
essentially
it was a pointless day. There was
It
nothing
didn't
going on.
exist compared to
There
this.
really was nothing to be said other than the way that the corn spreads closed.
Yeah.
But with the chaos going on, I don't know how much credence to really put into the corn spreads today.
So, Brian, I want to circle back to something you were talking about earlier here at the desk. The setup we're looking at in the lean hog market. Today, we had a big day in the deferred months. We saw Oct up 2 1/4. Deese was up 270, or
Deese was up 240 even.
240. I mean, there was some action going on there after quite a bit of letting the bears really run the show in the hog market. What are we looking at here now that we've seen this? Do you call it a turnaround?
I would call it a turnaround. The first thing that I would point out right away is it was not a commercially driven turnaround.
Spec driven.
If you look at the calendar spreads, our first or our highest month was in the Feb 20.
Okay.
So that was by far our leader, and we didn't get any kind of commercial bull spreading going on. So we had commercial bull spreading going on earlier. I kind of wonder if the last couple days a lot of the commercials didn't get what they need, because the other thing that we grains take the focus of the WASDE report, but livestock is also on that WASDE report. There could be something coming in the hogs. I don't know what, but based off of what the board did here today, it does not look like it was commercial buying.
Sure. Those front months just didn't have the activity, didn't have the action, and frankly didn't have the price.
If anything, once we went from negative territory to positive territory, they actually started to hammer those spreads even harder.
Right.
So, to me, I would say
buy this spread in here.
I think we're going to. Yeah, I'm bullish hogs here simply because when we were negative we had a little bit of bull spreading. When we were positive we had bear spreading. So commercials are getting what they want right now.
Right.
So that kind of puts them
They got a $20 savings in the past two weeks.
Right. So that it's like putting them in neutral in this case. So now who's going to be the driver? Is it going to be the spec longs, or is it going to be the spec shorts? And in this case, we've had a heck of a sell-off.
Yeah.
I would think the spec shorts are going to want to bank some profit and
Eat a steak with their money.
absolutely.
And this brings back a point you made earlier today in the discussion point we were talking about, and we're talking about maybe even mentioning in the video, which is when the commercial buyers have a pipeline to fill of their commodity, in this case for lean hog buyers or corn, like we were actually talking about earlier, going into a big report like this, if they've already done the buying they need for the next couple of weeks, they've given themselves a cushion to watch the report
Absolutely.
and not have to do anything into it.
Yeah,
And
they-
actually, it might give them 2 weeks after the report, if prices go lower, to wait for prices to drop.
And 2 weeks is also a number that we're just
It's
picking.
right.
We're
Right.
shooting
Totally
from.
arbitrary.
It might be a month. It might be 4 days.
But they
it
have
might
a pipeline
be right
that they need
exactly,
to fill, and we're
exactly.
trying to think about, okay, how far back would
And-
we as a commercial, getting
As
in
a
the
hog
commercial
buyer,
mindset,
as a co-op
And
would we
elevator.
buy that
So
at
and
large?
and the my
quotas.
biggest fear off of the commitment of traders report, and I think I showed it to you. I don't know if I pointed it out to you yet or not. But if you look at how we're situated for the commercial longs and the commercial shorts, so the commercial longs have been decreasing.
Mhm.
So that leads me to think higher spreads right now. We have commercial longs building their book up again. But the commercial shorts, producers for the most part, or somebody that did an HTA to an elevator,
Right.
but the commercial shorts, the guys pushing supply into the market, they have taken advantage of this rally. They have greatly increased their net short position compared to what they normally would be at this time of the year. So that means for the commercial buyer, who already has been buying more now, has those commitments coming. And most likely those commitments are probably old crop. A good chunk of them is going to be new crop,
Right.
but there is still old crop that was
Oh, wow.
added to that commitment that
Oh,
was
yeah,
sold at a
absolutely.
great price.
Right.
So that guy bringing the corn in doesn't care that we're 40 cents lower than where we were because he's not.
He's
We
eager to
have-
cash the check.
We have years of bumper crop corn sitting in silos and in piles.
Right.
still, and that's going to backfill the
Yes.
supply
Yeah,
chain.
it's going to take a long time to drain that pipeline. We don't have higher crude oil on our side. We do
No.
not have a weak dollar on our
Especially
side.
after today.
We do not have trade relations on our side.
And crude oil, another market we didn't really touch on,
Right.
but had a big
Huge
down day
move.
after a big surprise in, well, I guess it'd be a surprise to me in inventories to the upside.
Clearly a surprise to the market.
Right, and the market clearly
Is
responded
that
that way
what
too.
happened in
Yeah.
oil?
Yes, and
Huge supplies,
Right.
both crude and distillates, everything.
Everything.
Okay.
Yeah.
so
Yeah, it's nuts. So, Dan, you buying crude down in here? Or we got more room to run to the downside?
you know, we're down into the low end of a range we've been trading in for several months. And I'd like to say that we could find a footing here, but I wouldn't step in and be a buyer per se without confirmation of a little bit of a low. And once you have it, you do have a good level to lean on for risk and to put a stop. But without that in place, I think it's catching a falling knife right now.
Gotcha. Gotcha.
So,
It's your buy tomorrow, Brian.
what's my buy tomorrow?
If you had to, if I called you and said, Brian, what do I buy? What do you say?
I mean, if I have some contingencies in the overnight, if grains can
Good
open
point.
higher,
Good
if
point.
we see a new high, you know.
Are we
for
talking like a
corn,
day trade or are we talking a positional trade?
Whatever you're feeling.
Okay, so if
Dealer's
we're-
choice.
If one of both, if you have one in mind.
okay, so if we're doing a day trade, I would buy hogs. And you're going to find in the newsletter tonight, once that goes out, I do have a trade recommendation in to buy hogs. I think we're going to go higher off of speculative money, banking their profits going into the weekend. Knowing that we have the Wazoo report coming up on Monday, I am not as optimistic as what the average trade is. I mean, if I was included in the average trade, I would have actually widened the range of estimates when it comes to the corn ending stock. I'm like 230 million bushels above the highest estimate of those that are surveyed.
Okay.
I guess I'm in the boat. We don't have demand when the prices were low. I don't think we can come anywhere near meeting this year's demand if we're going to be talking $4 corn.
So
And I
basically the idea being we need much cheaper corn to actually begin rationing demand.
right. Well, no, we need
Yeah,
cheaper corn to keep the demand there.
Right,
Keep
right,
demand,
right,
right,
yeah,
keep buyers
right.
buying.
Right.
Any
I mean,
price above
we,
X.
we have a
brings
strong
demand down.
dollar. Maybe that's going to change. I don't follow currencies enough
Mhm.
to know, but
Not enough at this point.
well, yeah, and it's
I shouldn't
and-
say that
well, the
because
question
currencies
is, so the
can't
dollar
overnight
definitely
half in value if
saw
they
that.
want.
but
We saw
the dollar
breakdown.
definitely could crash. But if the dollar's crashing, what happens to the Brazilian real? What happens to the Argentinian peso?
And
You know,
keep-
if we're in a race to the bottom, we're still coming in last.
And we have now started a contagion around the world of lowering interest rates. Royal Bank of Australia, they just knocked down their interest rate by 50 basis points last night. So double the cut that we just had to our own. So if other nations around the world start cutting their interest rates too, you're right, Brian, it's a race to the bottom that they're already winning right now.
Absolutely, and we have the strongest economy. It's going to be hard to get another cut
Well,
out of the Fed at this point,
and that's-
unless everyone else takes that next
And that's
step.
a problem
But then
with
we're
the dollar's
still
global
3
standing.
steps behind.
Right. It's a problem with trying to be the global reserve currency.
Yes.
It makes it better for everyone else for it to be strong. It really stinks for our exports.
Yeah.
In that regard.
Tough deal.
Yeah.
So, do we have any wrap up thoughts here as we get ready to retire for the day?
You know, I think that today was a hold your breath moment for the grains.
You
Not
were
much
busy.
changed
You were
yesterday.
busy all day. I'm going to give props to Dan. He definitely was busy all day.
Lot of phone calls.
I spent a lot of time not doing a lot. I looked at forward curves. I looked at charts. But props to Dan to keeping it rolling today.
Right.
Well, there are other markets to be moving in, and you know when there's people interested in those, it helps.
And I think it's worth mentioning for our listeners who are thinking hedging. I'm an agricultural producer, I hedge. Well, guess what else impacts your bottom line and can be hedged? Other markets.
Absolutely.
Crude oil, in particular,
Absolutely.
gold.
Gold, interest rates,
Right.
for anyone who
currencies.
has.
I mean,
yeah.
we can do, the fact is all of those things impact your bottom line. Right?
Absolutely. You know, the focus of when I created the page, when I created the group, even my profile, and, you know, who I am, my focus is agriculture.
Right.
That's not going to change. You
Right.
know
Mine's
that.
the same focus.
Yeah.
Yeah.
So outside of that, you know, I'm going to watch
we
what
turned
Oil's
experts.
doing, but, you know, that's
We turned
something that, you know, that's Dan's world more than agriculture.
Right.
Dan definitely is in the ag world,
Right.
getting more exposed to it.
And my background came from futures and trading, and then I learned ag.
Right.
Brian's background came from ag, and he has learned futures and trading. So we both
Right.
met in the middle and came from opposite sides, but
Right.
to the same center here, you know.
To an extent, you know, the one thing I will say, so had cattle, you know, my whole life always had cattle, spent my whole life absolutely hating cattle, hated cattle. Like
I
you
can imagine
cannot,
they're not-
you cannot
not
bold
fun.
that, underline
They're
it, and
so
circle
fun.
it.
Cattle are
I
the
hated
best
them.
critters
I'm
to have
sitting
on
No,
the farm.
no,
You can
no,
tell I'm
they're
sitting
not.
between a
They
cattle
are.
I would
man
I grew up with
and a
hogs,
farmer.
and then we got into cattle.
I,
And the cattle business is so much better. Baby calves, baby piglets are kind of gross. They're all slimy. You know, there's placenta. You know,
I had a
it's
dog.
what?
I'm just grateful
Dog.
you two kept my
Dog.
grocery store stocked.
Absolutely.
That's
what
what
it comes
I'm
down to.
grateful
So whatever
for.
angle in, you need help managing the risk in. That's what these guys do. They look at your operation and they say, all right, these are some things we notice that could create some risk. And at the end of the day, for a lot of us who have been in the industry, Brian and myself, on the production side, it's easy to get wrapped up in the day-to-day.
Oh, the
It's
emotion of
the
it
emotion,
is, and you
the
can't
work you put
bypass it.
into
It's
it.
impossible to bypass
Those
the
things
emotion.
create blind spots.
And risk comes at all different levels. There's
Right.
account level risk. Are you over margined? Are you
Right.
under margined? Do we have enough capital to do
Been
what we
there.
need to actually do? Right. Then there's, you know, risk in per trade.
Right.
Are we risking too much? Is this the right type of risk to take?
Yeah.
And then of
You know-
course the commodity risk itself, which we're trying to hedge with futures.
Right.
There's multiple levels of risk involved, and that's what we're here to.
You need
help
good
manage.
risk managers. Absolutely. Well,
Absolutely.
Brian, any parting thoughts?
You know, with that, I was just thinking I have a lot of writing I have to do yet here
You
tonight. We got
You
the
do. And you
WASD.
got the-
Well, WASD's coming up on Monday, so tomorrow we're going to be doing a little bit much more of a focus. So tomorrow around somewhere in the morning, we're going to do a live on here, and in the afternoon at 3:30.
3:30.
So at 3:30,
Central Daylight Time.
yes. So 3:30, we are going to be doing a webinar hosted by the one and only.
Moderated by me, hosted by the actual people who understand the markets. Brian, Dan.
I'm just going to be
Ted.
talking.
And so you're going to want to tune in. You can find the link to the registration here in the group page. For you YouTube friends, I know we've picked up a bunch of you here over the past couple days. Check the Ag Hedging Facebook group. Brian, how do they find it? Just Ag
You
Hedging
can, yeah,
Chat.
the handle's just the @ symbol at Ag Hedge
And
Brian.
we'll be sure to
AG
include a
Hedge
link
Brian.
with the
Yes.
get the link in the summary.
Yeah, definitely. And if you have any questions at all as how to find it, I am at 312-277-0119. You can message me on Facebook. You can shoot me an email at bgrossman@zaner.com. You can Google us at Zaner. And
You bet. Find me on Twitter at Pearson Cattle. You can reach me at the office at 312-277-0112. And Dan, where can they find you?
On Twitter, Daniel Hussey Jr. and at the office, 312-277-0110.
so with that, I am going to cut this off. We're going to give a shout out to the boss man, though. Boss man is sitting back in his office
One of these days, we'll
doing
get him
all
over
kinds
here.
of crazy work because we have a lot of good stuff going on here. So he is working hard on what he needs to do. We are doing what we need to do. You guys stay busy in the fields and give us a
Right.
call because
Give
we're
us a
here to
shout
help.
out, a comment
Bring us
below.
bourbon, bring us beef.
Absolutely.
Until next time.
Until
everyone.
next time, later. We need to drink more before we do all of these because that was